Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up discussion today. We have the S&P 500 hitting its fourth consecutive day of all-time highs. Got gold up 10% in the last 30 days, more all-time highs there. And we've got Bitcoin lagging before FOMC this week. We'll be discussing all of that in a moment. We've got Elon buying $1 billion of Tesla shares, surging past $400. And we've got Coinbase affiliated ETH L2 Base announcing it's exploring its own network token. So a lot of stuff to talk about today, moving around the various assets we are now interested in, increasingly a number of which are available on chain. So they're all fair game. So we'll discuss all of them. We've also got the latest on price action on crypto and NFTs as usual, plus a general discussion on where we think attention is flowing. So stay tuned for that. I've got Legendary in the co-host seat with me today. We are ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is incredibly risky. We do not know anything for sure. And sometimes we employ some fairly risky strategies. So please proceed with caution, exercise your own judgment at all times. With that out of the way, Legendary, it is Tuesday. It is the 16th of September. How are you doing? How are you feeling?
Jim, doing quite well. You have an interesting background going on, an unusual background, textured walls. What's the story? Where are you?
Well, you tell me they look good.
I like it. It looks way better than my plain white wall. It's a nice addition for, the diversity of backgrounds in the show.
I hated it. I told you that I hated it. You said it was good. I'm now wondering whether you told me it was good just so you could make fun of it live on show. Is that what's going on?
No, it's not what's going on. It's definitely not a revenge play for you not being on the show yesterday, but listening in the audience and making me feel like you're the teacher in the classroom and I'm holding some sort of presentation and you're listening to see if I'm doing well.
Yeah, that was the intention. Just keep an eye on what's going on, be in the audience, hidden in the audience, just making sure that we're not, going off topic. Got to stay on topic, don't we? While you're in charge. How did you find it? I found it a good discussion. Things are obviously moving a lot. I think one of the things you were talking about yesterday was that it was like a very, very active weekend, right? Like a very active weekend. Like as you reflect on it, a full 24 hours later, I'm sure you've come to some very meaningful realizations. But I don't know. I feel like things have settled a little bit. Pump has slowed down at least. We're going to talk about Pump a little bit today again. But just any kind of reflections after quite a busy weekend and ahead of the FOMC tomorrow. I think it's tomorrow, isn't it?
It is tomorrow. Yeah. Main reflection is that I think it's time. I'm always a big believer of the theory that I don't think it's the smartest thing to lock in on a single thing in crypto, because if you're picking the wrong bet, you are essentially screwed for whatever part of the cycle or of the meta this is. So it's good to have your eye on 2-3 things if you can handle that. And I feel like there's more and more things coming every day that I find interesting. And I can't do all of them, obviously, right? And I have a lot of active trades on at the moment. So I will need to deprioritize stuff. And that's typically what I struggle with, what I find the hardest, because I want to play and dabble in many games at the same time, and deprioritizing stuff and just closing bets where I think they're still good, but just because I don't have the attention span to focus on all of them is something I dislike.
I think it's really interesting because all of these things are a double-edged sword when it comes to a participant in our specific market. And maybe this is the same for all markets as you become a more sophisticated participant. Like the thing that is best about you is that you're good at clicking a lot of buttons and going across a lot of things. And simultaneously, that then creates your biggest problem, which is that you maybe have too many. Whereas I'm maybe on the other side where it's like, I want fewer positions. I want larger positions. I manage my attention that way. But then the converse of that is that I struggle with like catching the newer thing because I'm like too slow because I'm too kind of relaxed and set and maybe structured. So like I don't know, the poison is the same thing as what's the opposite of poison? The antidote.
Yeah, that's true.
The poison equals the antidote.
The other thing that I can say now, because we don't have Brett on the show today, he's not listening in the audience, as opposed to you.
Could be.
He isn't.
Anonymously.
Yeah, maybe that. So I'm a bit worried for when Mega ETH launches, because I know there's like a ton of protocols on there that I want to explore as well. And at that point,
you really will have no time.
that and I start to be allocated. Like I start to be creative with where I get stuff from. Like yesterday, for example, yesterday I had to make the decision. I bought a couple Pokemon cards in an OTC deal. And I was like, where do I take the 20K from? I don't want to attack my stable reserve. Like, do we take some money out of Liminal to buy Pokemon cards? And it works with sums like that. But when I want to move into Mega ETH in a meaningful way, play across multiple protocols, and I will seriously need to reallocate capital. And I don't want to do that.
That's a great question. It's not just Mega ETH. Plasma is coming relatively soon as well, right?
Frees up capital though, right? That frees up capital in a sense, because we have stables, like I have 6 figures worth of stables waiting for Plasma mainnet to launch so I can access them again.
That is true. But my bet would be that in the same way that when any chain goes live,
there's going to be stuff to do there and you're going to lock it up again for something. Yeah,
exactly. Like if the valuation comes out well, and pre-market still suggests that, right? It's trading at, I think, 80 cents when I checked earlier. So that's at 8 billion FTV. You're going to want to be on that chain. Like you don't go from a chain that's 8 billion down to a different one. And to add more misery to our woes, our stablecoin woes, Base obviously are now discussing their token, which we're going to talk a little bit later today. And I guess opening the door for increased participation. So if you've got any stable coins, or if you're struggling to find any, you're going to struggle even more now, because you're going to want to be on Mega, you're going to want to be on Plasma, you're going to want to be on Base
and Hyperliquid.
And Hyperliquid, right? You're not forgetting Hyperliquid, where our positions are very significant and don't really want to leave there, frankly, because of how valuable that is. So this is going to be a good conversation. Maybe we'll circle back to it as part of the Base conversation, because we'll try and rank these opportunities and talk to the Base opportunity as well as speak about these others, because I think that'll be interesting for people. Because now, as we said all summer, take your hiatus, take your time out. September, people are getting ready to ship. And that's now the season that we're getting into. Everyone is ready to ship. Everyone is ready to lay down their incentives. And the game will be, from the smart allocator, from an attention and capital perspective, like, right, which one is better? They're all good. There's a reasonable world to say they're all good, but which is better? And that's what we will try to slice through.
One more sentence on that. This should ultimately be very good for us, right? Because if all these like massive protocols, and then you will have Monad coming at some point as well, which I'm not too interested in, but still like relevant, right? And everyone's like competing for user base and attention. They will hopefully also compete on the incentive side and making it lucrative to allocate your capital there. So that's my ideal scenario there. Yeah.
Competition in our own minds for attention, but also competition between the protocols to capture the capital. So yes, I agree with that. I like the sound of that. We'll discuss that as part of the Base conversation towards the end of this show. Just some shout outs here for Swizzy saying Plasma said end of summer, which should be end of this week, beginning of next. So yes, I think that sounds appropriate for Plasma. Iceman said, my two main focus is Somnia, newer chain, aka decent airdrop farming and games over there. Second will be Mega ETH. Somnia airdrop went pretty well for the people who participated. And Notorious Big Bull, my Mega ETH farming is just bad buns at the moment, stacked several and just sitting on them. Not a bad idea, probably one of the only ways to get liquid exposure at the moment. Obviously, when the chain goes live, there'll be way more stuff to do. Right, let's get to it, to get you up to speed with all the stuff that is going on in the market. As usual, starting with the majors, we have Bitcoin at 115,000, pretty much flat, up 2% on the week. ETH is flat as well at almost 4.5K. I'll give it the 4.5, though it's 4498. Got XRP up 1% to $3. BNB is flat at 925. Solana is flat at 235, up 7.5% on the week. We have Hyperliquid just down a couple of percent to 52. And we have Sui flat at $3.60. So kind of stable here. Crypto kind of waiting perhaps for FOMC. We'll discuss that more a little bit later. We've got Doge flat at 26 cents. Pepe's flat as well. Pump is flat. Also, I don't even know if I need to carry on here. Everything's flat. Bonk's up 1%. Trump's flat. SPX down 1%. Plus 1%. Down 1%. That's the general sense. If I'm looking at this from a very holistic perspective, maybe, to be honest, everything's just in that kind of got that kind of action to it. So
a notable comment here would be that even over the week, most of the things are flat or red, down a couple percent.
Sure.
With Doge being up 10%. With the ETF stuff, probably.
That is a great pointer because, yes, if you wanted to, and of course, if you're looking over the week, Pump is up 68% on the week. Fortunately, I don't know if we were in for all of that, but I think we were in for most of that, right? We were talking about it on the show around the 50s. Was it 50? Sorry, the 5 bill region?
5.3, yeah.
Yeah, so managed to capture most of that. I said in our group the other day, I decided to just take some profits there and reassess. I'm just like reassessing. I think it's a good business model. But no specific reason, actually. I just felt like taking some profits. I was going to then go to, the point about Doge. Doge up 10%, I think is pretty helpful, right? Because it just helps all the other coins feel more confident when Doge is up. Do you think that's still the case? That seems to be a general sentiment, Legendary, but...
ETF is coming this week. That is,
okay.
as of the news that we know today, was supposed to come last week, I think, but got postponed. So we should see it this week, from what I was able to gather from around the media. We'll be interested to see how that plays out once it's live. But I also see Oxy with his hand up. So I'm wondering if Oxy, you have any additional info or thoughts on the Doge situation specifically.
Not on Doge specifically. You were just talking about Pump. I wanted to ask a question on that. We can circle back to later if you'd like to. Yeah. So obviously, I mean, I know it's the revenue play. I know we did a lot of analysis on the show, and that was super helpful. I was curious long term, your guys' thoughts. I mean, if you're comparing to Hyperliquid in height, is the long term play for Pump that there's going to be more of a use case for the Pump token? Because if you look at Hype and you're trying to compare the two, they have their Hyper EVM where Hype is the gas token and there's like use cases for it. It's used in all the various DeFi products. Is the long-term idea that it's going to be used in the liquidity pools for these, for the various creator tokens, and they're going to maybe create their own L1, so on and so forth? Because I was looking at my portfolio this morning. I'm like, okay, what's the long-term play with this one? Obviously, with the revenue meta, they're buying back the token, but then there's got to be more than that. I feel like it can't just be buy token, goes up infinitely without other use cases. I'm curious to hear his thoughts.
My long-term view, and this is not just to make this clear. So me still holding my Pump position is an expression of thinking this creator meta and the attention that they're getting will go on for a bit, and I want to scale out of that at some point. But if I were to formulate a long-term thesis, then it would be that they will want to capture more of the value they're creating. Obviously, the swapping, etc., being a part of that already, right? Which is volume that they managed to scale up very impressively. And as you said, move to their own L1 and build from there on. Now the question then really becomes how much value has Pump added to Solana, and how much value has Solana's recent pump added to Pump itself, and which outweighs the other. And then your bet would basically be that Pump becomes so dominant in the Solana ecosystem it's actually meaningful to Solana's growth, and for that reason they will at some point then venture out and have their own L1, and that would be the long-term bet Now, if this is going to happen, if this is going to sustain long enough or not for that, I have no idea. And that's not a bet I want to take in my portfolio, but that would be my long-term potential view on it.
I like it. I've got, look, that's one of the bull cases, right? And I think it's already established itself as a money printing protocol. So there's no doubt about it in that sense. Let me just articulate one bear case. And maybe it's a bear case to prevent it from becoming like, in fact, I'm not entirely sure at from which point it becomes a bear case, because arguably it's still undervalued based on the buybacks it's doing on its current valuation. But this is one line of thinking that I've been thinking about. I put this in our chat earlier today, and I said something like hype. The big difference between hype and pump, because this is the comparison that people are drawing at the moment. One of the big differences, because there are a few, is that hyperliquid made people rich, pump makes people poor. Every now and again, you get someone who becomes very rich on pump. The proportions are very, very small, whereas hyperliquid, via its airdrop, made lots of people wealthy. And in addition to that, the core user of hyperliquid, either by virtue of them becoming rich from the airdrop, but I think they were even wealthy anyway. So I think that's one of the things. And I think one of the arguments for pump is like, well, obviously it's a different business model, right? You're trying to attract normal people. And one of the bull cases that, okay, we're going to attract all these people. It's going to be loads more people using the thing. The people have mentioned Web 2, prominent people coming on. However, you've got to walk through in your head like what that actually means for a process. So sure, that's going to bring a lot of attention and maybe some activity in the short term. And then what happens with these tokens? Like, people just get burned on them because that's what happens with them. So you had an example, and shout out to Signal for sharing this in our chat, in our Telegram chat earlier today. You had this tweet. Ledge, do you have it? Are you able to pull it up? It's the first one in the...
Yes. Yeah, I know which one you mean. You mean this one. There we go.
Yeah, so this, I believe, in fact, I'm assuming they've got a TikTok handle in their bio, and they're a creator on TikTok, I guess, and just putting out this post kind of apologizing, saying I'm getting a lot of hate, criticism, threats because of my stream earlier. There was a recent Facebook post where I've been accused of rug pulling, and comments have accused me of fraud. I did not think that streaming on this platform would have such a big effect, and I only saw this as an opportunity to learn how to do crypto, have fun, and chat with you guys. I'm currently working on a way to find a way to donate 70% of my creator rewards to charity. The other 30% will be bought back into the coin. This will all happen on my stream later. I want to make it clear also that I never sold a single token and never planned to profit from anything. And so that's the vast majority of the message. I can see this happening over and over again with people. And yes, people should take responsibility for themselves, and the audience who are watching. If you lose money speculating on a creator coin, that should be on you. I'm always of that opinion, but I'm also of the opinion as the creator, and this is why I was kind of not very pro Zora coins, because to me it doesn't make much of a difference. Just because one's on base and one's on Sol doesn't make the base ones better. Why would you do this as a successful creator and create this headache for yourself? A bunch of their audience have just lost a ton of money, and people are getting angry at her. Why would you introduce that headache into your life? Like, unless there's a smart, interesting way to go about this, and there probably is if you were to get a market maker, and if you could control the supply of your token in the way that some more established people control the supply of their token, yeah, sure, but that's not what this is designed for at all. So this is how I would articulate a bear case for the idea that this is going to be some humongous onboarding event for loads and loads of people. Sure, it can be very exciting and interesting for a period of time, but think just 2 days later, everyone gets burned and lost a ton of money. Like, that's not going to be as fun. That's not very fun when you buy in and lose money, and then you're just going to keep buying into coins and losing money again. I'm not entirely convinced, although there is an industry of people who are going to do that. So That was me articulating that side of things, Ledge. I still think it's a money printing business and it could go higher from here, but this is just, an alternative perspective that clearly should be considered, I think. What do you think?
Yeah, just to reply to that, and then one additional comment. So I feel like what most people fail to realize is, you have creators who are creating on TikTok, on YouTube, and doing podcasts, whatever, and they're making some sort of money. And the discrepancy between the amount of money that we are making in crypto, and then this kid who had this stream, I just seen a screenshot saying he's only has like 120 hours to live, being like in some sort of a propped up hospital bed, and then made 14K in fees, and then like shut off the stream and basically rugged. That's a lot of money for a lot of people, $14,000.
Sure.
And what people don't realize is exactly what you said, right? If you get monetized off YouTube, then that you have companies paying for ads. Those ads will be redistributed to viewers, and that money will go to the creator. So that's a business model where you, as the viewer, view for free served ads, and this is how the creator makes money. And the difference is, why is the discrepancy so high? Why can Pump Fund pay those fees? Because the viewership is also paying in, right? It's not sponsored by ads. It's quote unquote fueled and sponsored by people buying that token and doing speculating on that and driving these fees. And this is why you can even realize such a massive discrepancy, because you have to basically include your audience in the trading and volume creation process of generating these fees, which you can then distribute to the creators. It's not the case that, I feel like from an outside perspective, a lot of people won't understand that. They're not a company that pays like just 100 times the ad money, and this is where the creator earnings are coming from. They're coming from people trading the token. And that's a novel concept that a lot of people won't like immediately get. But of course, they will be like intrigued by the money and seeing, oh, these guys are making a couple $10,000, which again is a lot of money. And then adding to your like alternative scenario, and this is actually the thing that I've been thinking that would worry me, is still like this looming thought of a potential pump airdrop. Because as you said, matter of the fact is that most people lost money trading meme coins. There's a few people who made money trading meme coins, but most people would gladly, I assume, sell their airdrop in pump tokens to offset some of the losses that they incurred over this year, over the last year. Trading memes me like, oh, at least I get some sort of a loss back from the casino.
For sure.
And I don't, and as someone who's holding like a spot bag of pump, and it's a bit of a like almost bit of a paradoxon to a certain extent, because I don't like this streams and this rug pulls, and seeing that annoys me. But on the other hand, this flywheel of onboarding creators and creating more fee is what pumps my bag. And then I also it's one of the few cases where I don't want to see an airdrop because I don't want to see those tokens being dumped. I mean, I would obviously get, probably if it were done by volume, I would get a hefty airdrop myself. So then the assumption would be you would then reward the creators. But if creators are willing to rug for $15,000, then obviously would be happy to dump a 30K airdrop as well. So yeah, that's an additional perspective to your alternative view, that the airdrop is something I'm worried about potentially.
Yeah, I think for the big revenue generating businesses, maybe I agree. The people on the creator side, people would be selling that very fast. So that's definitely something to be aware of. I don't know if we have any particular insight or details to when that airdrop will come, but that's the same with all airdrops. That's something to be aware of for Pump as well. Just a final point on the creator fees. I mean, I guess this is put forward as good news, and I think it is in some ways. Yesterday, Pump Fund paid out over $4 million in creator rewards, most of which went to first-time creators that are now able to realize the potential of their dreams. A Cambrian explosion of ideas is well underway, powered by tokenization. That is the most optimistic way that you can frame this, which is the correct way to frame it if that's your business. So framing it as creator rewards is definitely the right way. Obviously, when you think about how do you get your hands on those rewards, it is by people, your audience, speculating on your token, buying it, selling it, and probably 9 times out of 10 losing money on it because of the nature of the game. So let's see. let's keep an eye out. I mean, we just wanted to articulate the other side of it because there's been a lot of bullishness as well. If it does continue to play out because there's enough people creating, I think the number of people speculating will be equal to the amount of people creating. So we just need to watch that number, I think, to see how long it can last. Like if people keep trying, then there'll be someone to speculate on it for sure. So let's keep an eye on it. Ledge, do you have anything else there? Otherwise, should we keep it moving?
I see Carp in the audience with his hand up, so I wanted to get him in on our pump discussion and then keep it moving.
Hey guys, on that, I know I see a lot of people talking about how like, and myself included, I kind of thought the same there for a minute, is that this could be kind of like a big, like a Web3 version of Twitch or whatever, and then onboard a lot of Web2, creators, as well as bring their community over. So like some big streamers coming over, they get into crypto, they have to create a wallet, right? And then it gets them to start like dabbling, right? But as we've seen here with this creator, we've seen multiple of them now, especially the one that accidentally, she just stopped her stream and then everyone called her a rug. It's kind of the downside of, like the meme coin trench mentality, right? That the people who have been here a long time, they just kind of are going to push back. And like, I feel like there needs to be like a better system, kind of like you guys talked about with like market makers or something, especially for these like bigger streamers that are coming from Web 2. I feel like there should maybe be, or they could be, like an onboarding process or something like that to get them more familiarized with crypto, because I feel like Pump has something special, but in the current state for the like bigger streamers coming over and trying to onboard their audiences into Web3 or, get their, because they have a good system of the creator fees. But again, just where it stands currently, I feel like it's not the greatest. It's going to get a lot of the new people burnt out on crypto. Your first appearances are huge. Your first experiences are huge. So coming in and losing that money isn't going to feel real great. But I feel like Indeed. It does have some really good upside.
Interesting. Yeah. I mean, I don't disagree with anything that you just added there. I think one thing, maybe just to close the topic, is like, look, if there's a reason why so many of us in media and crypto won't do it, then it's kind of hard for me to imagine why we should be building rails to suggest to other people to do it. Like, I don't know what onboarding process would make it better. If people in our industry, so many creators in our industry, like, would not do it. Because basically there's no way that you could onboard us onto it. So it's just hard for me to see the correct way to do it. Maybe there is a way, maybe it gets normalized in a way, maybe it gets destigmatized in a way. But if it's trading so quickly and so fast, then people keep losing money, and that's just never going to be a fun process for people. So let's see. I do think that would be the one solution which you alluded to, which I had mentioned. Like, you're going to have to control the shit out of your token, get that XRP vibe going, and control your floor somehow. Got to figure it out, because otherwise all of your audience going to get wrecked, and you'll not have an audience left. So that is the thing they need to work through, I think. But we've got more things to talk about today. We want to get you through the rest of the roundup to get you up to speed, because there's some interesting stuff. And then we'll get into an important discussion on, every asset just absolutely ripping, and want to talk opportunities on base too, with that potential token coming. So just a reminder, the headlines today is that the S&P has hit 4 consecutive days of record highs. Gold's up 10% in the last 30 days at all-time high. Bitcoin is lagging a bit. We've got the FOMC this week. Legendary is going to break that down shortly. Got Elon Musk buying back $1 billion of Tesla shares, surging past $400. Coinbase affiliated ETH2 Base is announcing it's exploring its own network token. We will discuss the opportunities there and compare them with the other major chains either launching or that are live that we like a lot, and how we might want to take advantage of that. We've got anything notable on the NFT side, Ledge, before we hit the rest of the roundup?
No, let's skip NFTs for today. Nothing interesting going on.
Okay. Michael Saylor and other crypto advocates are meeting Senator Lummis today in Washington to discuss the Bitcoin reserve. Thought that was pretty important. Polymarket filing alludes to other warrants offered in latest raise, suggesting a potential token launch coming. I think that is quite anticipated. As we mentioned, Pump Fund daily revenue overtakes Hyperliquid and pays out $4 million in creator fees yesterday. Athena Foundation prepares to turn on the fee switch. That is pretty significant, although the price action again is down. I think the VC unlocks are still happening. Helios Medical raises $500 million, led by Pantera and Summer Capital for a sole treasury strategy. SEC and Gemini reach a resolution to resolve their litigation, which began when the SEC charged Genesis and Gemini for its unregistered crypto lending program. It looks like they're trying to just get crypto business moving, end the litigation in general. That would be my general take there. Native Markets confirmed as the winner of the validator vote for USDH, the stablecoin ticker on Hyperliquid. And then just a few more points from around the space. Nakamoto BTC Treasury Company share price dropped 55% today and 71% on the week as I guess some of those original shareholders unlocked and managed to just sell the hell out of the token. Moonbirds launch AI creator contest, and prominent collector and investor Seed Phrase announced as the new owner of Wolf Game, which was a very popular crypto game from the 2021 cycle, which was then taken over by Pixel Vault. And now, as Pixel Vault has been that's been taken over as well. But as they've declined, now that is in Seed Phrase's hands. So that's the roundup, Ledge. Before we get into the main stuff today, we've got some interesting stuff to talk to. Is there anything else you want to touch on first?
Yeah, there's actually a question I want to ask you. Given that you brought up Polymarket, with the raise, we've seen billion-dollar volumes across the Polymarket, across the prediction market industry. Kalshi doing volume as well. Myriad getting more and more exposure, and I feel like across all the things where we are positioned, we are not really doing a lot on the prediction market side, apart from referencing different bets on Polymarket for the show and putting in the occasional bet. I'm certainly not farming that with size. And I just wanted to ask you the question, if we are still happy with this approach, because we're just focusing on other things and we acknowledge this is a good opportunity, but we just don't want to allocate to that, or do we want to think about that again? Should we? Maybe not on Polymarket, because just on the Fed rate cut bet, there's $140 million in volume. It would take so much money to make significant volume on there. Maybe use some of the smaller players, maybe have a look at Myriad and get some volume done there. Like, is it something we should be rethinking, or are we happy with our approach as is?
It's a great question. The answer to the question, now that I'm thinking about it, is I don't know. I'm really thinking about this live hard, because two things can be true. I think one of the things we've learned from airdrop farming, or one of the key learnings that I've taken away after doing very well from airdrops over the last 4 years or so, is you really do, if possible, want to be allocated to the best one in a category. In general, my thinking is to be allocated to the best one. So now, for example, you have Hyperliquid is the best one. They're going to do a season 2 airdrop probably at some point. Should you do lighter as well? Maybe. But my general rule is stick with the winner. The next one is not going to be as big based on experience. I'm sure there's some where the founders are killer. They're going to take over the person that's the primary winner so far. Maybe there is that opportunity sometimes, but in general, in my experience in this industry, the winner is the winner. There'll be a ton of copycats that come after. All of the value gets dissipated across all of the people trying to copy. But if that sub industry is significant, the thing that is best will be very, very valuable, and it will probably surprise to the upside. So based on that alone, the answer would be we should do something on Polymarket, irrespective of the fact that there's a lot of volume there. Having said that, I think us in 2021 or 2022, it would have been incumbent, it would have been essential for us to do something on Polymarket, because the amount, say we got 10 or 20K from it, from whatever activity we were able to muster, that would have been significant then. Now, I think if we were to allocate our time and attention to that, the same outcome would not be, we have to weigh weigh the potential input to the potential output. And I think what our relative edge is now is probably not that specific industry. It is probably hyperliquid. It is probably mega ETH. It is probably plasma. Certainly hyperliquid, I would say. And so it's just a question of like, do we go and do a little bit? Is that worth our time? I'm leaning towards no. But it's not because it's not valuable. Like if you thought it was an interesting segment of the industry, which I think it is, and I think it's going to be very valuable, I would allocate time to it. That's if you don't have a relative edge somewhere else. So that would be my caveat. I don't know. What do you think, Ledge?
It's a very good question. I think if I were to do it, this is how I would do it. I would hedge my bets across different prediction markets, which is
because you don't want to lose money.
Because I don't want to lose money and I want to generate volume. Exactly what you can do on Hyperliquid and on Lighter to get volume on both. We talked about that on the show as well. Now it's a bit more difficult because the majority of the volume sits with Polymarket, and there's not many bets where you could do significant volume on both sides and on two different Polymarkets to be hedged. So this is what might make it a bit less interesting. But then I've been thinking about like layered plays. For example, last year when Virtuals was hot, there was Polymarket, which was this AI agent that was basically supposed to autonomously farm Polymarket, the prediction market game, and that did tremendously well for a while. So if a layered opportunity like that comes on top, I'd prefer that as a bet versus betting on the second best. Or as Swizzy pointed out in the comments, if the thesis becomes that there's another reason to do something with Myriad, you could make the argument you're farming abstract as well if you want to collect XP on abstract, which would make sense. So for me, that would be the more intriguing play right now. Maybe do that to get the 2-in-1 on abstract, but not starting to rank up significant volume of Polymarket. I don't want to do that now, and I don't want to spend so much time on finding hedge plays. Plus, I already struggle with capital allocation because there's so many other things I want to do. So I liked how you expressed that in 2021, we were farming Arbitrum. I think it was 21 or 22. I don't know. Years ago when we were farming that, and you had the opportunity to, explore the protocol, farm the airdrop, get a couple 10,000 out of that. That was like a good input to output ratio. But now, and especially if you want to catch up on all the existing volume, and with the capital constraints due to full allocation, not gonna do the Polymarket farming now.
Yeah, I think that's the right way to put it. It's like, yes, it is valuable. Yes, it would be good, save for you having a specific edge in a different part of the market. I think that's the way to put it.
It's a great opportunity. It's not one for us right now, and under the given circumstances that are true for the both of us.
Yeah, and I think the broader learning there, irrespective of taking it out of the prediction market conversation, is just follow your edge. That's like one of the biggest learnings, whether it's an angel, whether it's liquid investing, whether it's VC, whatever. Just follow your edge, know your edge, and I think try to double down on your edge if possible. So, okay, I think we answered that very, very well. We'll talk more opportunities on the base side in a moment. One thing I want to get to very quickly, I'm just going to let you guys know this before Ledge is going to talk through the S&P, and maybe Ledge, you can tie in this Elon Tesla stuff to that broader conversation of just assets ripping in general, because then we'll talk about base. But the other thing I wanted to mention was this news coming out of Robinhood, which maybe even sets you up in a way for your other news. 23 hours ago, they announced that many groundbreaking companies stay private for years. Soon, everyone will be able to invest in them before they go public. Stay tuned for more updates on Robinhood Ventures. This was announced yesterday. And Omar from Dragonfly did this quite helpful TLDR on what you need to know about this. He said, Robinhood will be spinning up its own Sequoia and taking it public via an IPO. Retail has been long plagued by an access problem to the best of the private markets, and Vlad is solving it. Robinhood Ventures is being set up to invest in elite private companies, SpaceX, Anduril, OpenAI, across categories. The fund will be listed publicly allowing retail investors to own and trade shares on a public exchange. Personally, think it's a great access product for retail that leverages a top-tier brand to avoid the adverse deal selection issues. Would bet that 10 years from now, Robinhood is one of the world's most consequential VCs. Legendary Bread has been speaking about kind of shifting from Coinbase to Robinhood a lot over the last few weeks, actually. What do you make of this as part of the Robinhood package, this ability to access top companies before they IPO and get into them in a private context?
When I read it the first time, my immediate thought was, and I wasn't done with reading it, please let it be a public fund. Don't do it in the Robinhood app. No, not everyone has access to that. Plus, when you did the sign up for a specific IPO and you only get allocated one share, you can't do significant size in there. And I love it that it's a publicly listed fund that you can basically get the exposure you want to get. And just remember the conversation that we had last week when I brought up that post by Serp, the Ethos founder, who said he had Anthropic, the company behind Claude, the GPT competitor, on his table, and it had service fee, commission fee, brokerage fee, management fee to be paid for 3 years upfront, and an 18% take. So basically 14.5% fees upfront, 18% take. That is savage. And this is definitely not going to be such a fee ripoff like that that deal that Serp, which is still a great deal because you won't have any other way to get, as a normal person, access to Anthropic. So
yeah, it just makes you feel sick.
Yeah, exactly. So I absolutely love this coming out of Robinhood.
Yeah, I think the reason why I brought this up on a bigger side of things is that I just think after I looked at my own portfolio performance over the last few weeks, I'm noticing that on the angel side, I'm doing really well. And I think if you can select carefully and thoughtfully it feels like, I remember there was this great article written by Kobe maybe it was a year or two ago now, about how increasingly the value is captured in the private market first. And this was in that time when all of these L2s, maybe even all of these L1s and L2s were getting funded. By the time they come to market, all the gains are to be had. Why would you come out and buy the token on the public market when the people in the private market before you have funded this thing for 25x at a 25x lower valuation? All of the value capture has happened in the private market. The public market buyer, there's not much incentive to buy. There's not much more meat left on the trade. And so I think thinking thoughtfully about how to allocate to private markets might be important. Now, I'm not always a fan of the word democratizing it. It might sound nice. It might strike at people's hearts to think that people are being nice to you. I don't think that's always the case. I think people are being used as exit liquidity 9 times out of 10. And so you have to be thoughtful about it. But it's just something that's on my mind, and I think it's important to be aware that opportunity exists, and to know that this is coming around the corner for Robinhood specifically, given that it's kind of significant crypto forward in terms of what you're able to allocate to. So I think that's maybe my key takeaway, wrapped up with a few others. But look, we've only got 10 minutes left of the show today. We want to do 5 minutes on your section, Ledge, which is just general all-time highs across every single damn asset in the world. So tell us what's going on. Then I'll do some on the base token, which is going to be interesting.
Yeah, as you said, we see the everything pump starting with gold. Gold is up another 10% over the last 30 days, is up 0.5%. Basically that mini correction, which we've seen a couple days ago when the dollar had a good day and recovered a bit in the Dixie index, has been corrected ever since, and we are up again. We're almost at 3.7K per ounce of gold. Similarly, the S&P 500 is doing very, very well as well, up another 50 bips on the day, up 1% over the last week. Has 4 straight days in a row of record highs, currently at 6,615. Then the other two things I wanted to check in quickly is we have the FOMC meeting tomorrow. We have the rate cut. Just want to see on Polymarket, has anything changed? The answer here is clearly no. We still see 91% chance to see a 25 bips decrease, 7% chance to see a 50 bips decrease, and basically a very, very small chance that there's not going to be any change or there's going to be an increase. Absolutely not relevant. So we are almost certain to see 25 bips, but 50 bips is in the room with us, so to say, with a 7% probability. Then the other thing I wanted to see on Polymarket as well, extending on the topic of rate cuts, is the question, how many rate cuts might we see this year, which is a separate bet that also has significant volume in there, $60 million as of right now. And consensus there is that 50% of the market thinks we're going to see 3 rate cuts, 32 think we're going to see 2 rate cuts, so total of 50 bips, and 75 bips with 3 rate cuts. That is essentially 85% of the market thinking 2 and 3. Now, if you add the probability for 4 and 5 and ask the inverse question, so how many people do think we're only going to see this 1 rate cut tomorrow, only 4% of the market think that this is going to be the case. So the majority thinks we're going to see at least 1 more, and half of the market think we're going to see 2 more rate cuts, so a total of 3 rate cuts over the last months in 2025.
Do you think that broadly explains this asset, inflation, stock market, all-time highs, gold, all-time highs, because of what you've just, the literal data that you've just spoken about on rate cuts? Is there anything else? What do you think?
Yeah, I do think that this is the case. It's still interesting that Bitcoin is lagging, but on the other hand, you could make the argument we had our rally over the weekend, and we often do that we rally over the weekend. ETH did hit 4.7K, for example, and then correct down a bit to the Friday-ish levels, unless we had a massive run, and TradFi basically gets the price they had on Friday. Like, now that we have more institutional exposure, see a bit of this mechanism happening, but it gives me confidence to see that the rest of the market is pumping ahead of the meeting tomorrow, and that we're expecting more than 1 rate cut. So I'm not in the mood right now to take chips off the table just because the thing can be, oh, it's priced in, and from tomorrow on we're only gonna go down. I don't think that this is the case. Now, I don't know, obviously, the short-term trading action tomorrow, but that is looking forward from a perspective towards the end of year that I'm still very much happy to be risk on.
Yeah, I think that's an important point, right? Like, so we're not really, I mean, occasionally we might, but not like real day intraday traders. So maybe there's volatility around tomorrow, but I guess the point you're expressing is that on a multi-month basis in towards the end of the year, with the view that there's going to be 2 or 3, an additional cut on top of tomorrow, or one or another one, that makes you feel pretty comfortable to be in. Okay, that is interesting. I think, what do I think here? I think yeah, I think it's going to be pretty volatile tomorrow. I can't see. Remember, my optimum time frame is like the 2 to 3 month time frame, and I just can't see something turning around that ship right now. On maybe a longer time frame, there are more things that could politically become more challenging. But I think in the multi-month time frame, the 2 to 3 month time frame, I think this trend broadly continues. The only adjustment I'd probably quite like to make is I'd kind of want more gold. And I don't know, again, I'm in a similar position to you, where it's like, where does it come from? Does it come from stables? I think it's going to come a bit from stables for me, which I'm happy to just go into gold, and I don't know, say the market collapses and everything starts collapsing at some point in time. Like, I don't know, gold, I'm pretty happy to have it. It doesn't feel like a bad trade to make for me. Whereas, like, okay, I'm going to swap some gold stables for gold. Like, the two almost kind of equivalent in some way. I know that they're not, but it's not the same as entering like a high risk asset, is it? So that would be the one thing I'm looking to add here. Maybe that's it, to be honest. Otherwise, I'm kind of well allocated across the board. So let's see. Any final thoughts there, Ledge, in terms of your own allocation, or should we move on?
No, not that, but you said not a bad trade. I'm just going to use this as a quick segue to briefly cover the second headline, which is to
Yes,
do
please.
with Elon Musk, who did disclose that he did a $1 billion purchase of Tesla stock. Unsurprisingly, that was very bullish for Tesla, which is now back at $410. And I'm sharing this year-to-date chart on screen, which is pretty impressive because it hit these highs in January and then corrected from 406-ish all the way down to the lows in April and May, where it traded at 217, under 220. So if you look at it at a 6-month perspective, basically Tesla is up 64%, is up another 1.2% also on the pre-market, and on track to set also a new all-time high.
Real question, Legendary, before I do the final headline, is like this type of volatility is unprecedented. Like you basically got a 2x out of Tesla on a multi-month time frame almost. Yep. Like, what's the point of, like, does that not seriously call into question the allocations across into crypto? Like, it makes me think there is actually the whole point of being broad, the majority exposed to crypto is that it's an industry that's total market cap is incredibly low compared to where it is going in the future. But it seems like the volatility in the broader markets are presenting as good opportunities on a multi-month time frame. So this is what is making me think, okay, fine, I want some gold. But I've never really been a big stocks guy. I've kind of done all of this stuff, learned everything in crypto, and like that's how I've learned stuff. It's making me think I want to get exposed on the other side. Now I appreciate asset prices. It's not a great time to like start buying the hell out of something on the stock market, but it's just making me think of my allocation. Is that fair? Or do you think that's not to be thought about?
No, it is. It is very fair. And remember when we discussed this on the show, I just looked up the exact date when I said on the show that Commerce Secretary Howard Lutnick said buy Tesla. That was here. That was on March 20th.
And you did what he told you to do.
He said it at $230. The Secretary of Commerce gave you a free 2x in 6 months on a very large, very sizable stock.
The company founded by the best entrepreneur.
Yeah, that has a market generation over $1 trillion. So it's insane not to be in the stock market right now. And if anything, I agree with you. I should have a higher exposure to stocks and reduce crypto. The only question with that is the off-ramping and the tax events that would occur. So what I'm extremely bullish for, and this is the conclusion here, and then I quickly want to hear from Funky, and then we really have to move on because we are going to go a couple of minutes over time again, that I'm extremely bullish for on-chain stocks because there's a lot of people who have a lot of money in crypto who don't want to off-ramp, but who are looking at these charts and definitely are pissed that they don't have the exposure that they want to have to the stock market.
Indeed. Let's bring Funky in for a commentary, a final comment on the stock market conversation. Funky, welcome to the stage, my man. What's your thought here?
GM boys, I just wanted to start off by saying thank you. As many times as I don't listen when you talk about making moves, I'll never forget, Legendary, because you said you were basically really interested in Tesla because of the whole robotics angle. And then it was right around that time, because it was all during the tariff thing. I had taken profits on NVIDIA in my wife's Roth. And then basically when all the tariff volatility started, I put staggered laddered orders in, limits lower and lower down. I didn't get to 200, unfortunately, on Tesla. But basically I had 2 of the 3 limit orders hit. And so we basically doubled our Tesla position. And so I was very happy to see Elon fat finger buy a bunch and just send that thing to like $420. So thank you guys. Really appreciate it.
There we go. Good insight. Appreciate the shout out, Funk. Look, let's hit the final headline. I know we're at time for today, but this one is an important one. We'll just get you the news that you need and do a short commentary on it. This is the news that Base is exploring a network token. Base is the prominent L2, the Ethereum L2, built by Coinbase. They say we're in the early phases of exploration. They don't have any specifics to share around timing, design, or governance, but they are committed to bringing the community along with us and building in the open. A few more details that they've said in the article that was shared with the announcement. They said they had not considered issuing a network token. When Base launched, our priority was clear. They wanted to build a secure, low-cost, developer-friendly chain and ecosystem. But this year, they said they've achieved their North Star, and we've expanded beyond that chain into an open stack. And as we look towards building a global on-chain economy, we believe it should be open and accessible. As the ecosystem has grown and community participation has deepened, it's made us reconsider our philosophy. Exploring a token is one path forward towards making our vision of a global on-chain economy real, and a Base network token has the potential to accelerate Base's decentralization and expand opportunities for builders and creators across the chain. My take on that is that, sure, that's what they are going to say. That is the general thesis for why you would create this type of token. The main reason people are excited about this is because it means the people who've been using Base over a number of years should expect to get some type of allocation to this token. It should come out to be a very valuable L2 token because of Base's genuine success and genuine activity. They have all kinds of apps on it that are doing well. They've got a thriving ecosystem, and its attachment to Coinbase, of course, which is going to have some baked in value as well. So that is that. We had some commentary in general. I'd say the general commentary was that this is going to be super valuable. The question then becomes, Legendary, what can people do if they haven't done anything already in order to participate? So I think that maybe the first thing to say would be just, they've done the thing that everyone does when they're trying to encourage more activity. Like in the same way Howard Lutnick told you to buy Tesla, and I'm not saying this is exactly the equivalent because, it's obviously not the same, but Howard Lutnick told you to buy Tesla. What they're saying is, we are exploring the token. We can't give you any of the details, which means do some stuff. Do some stuff now if you want to participate. That is what they are trying to communicate to you. And so there are a variety of things that you can do. I suspect using its DEX aerodrome would be one thing that you can do. You can provide liquidity there. You can use football.fun is a game that that took the community by storm the other day. That's built on Base. Pods Media is one of the platforms we launched a few kind of collectible episodes. I'm sure if you've interacted with that, there's just all kinds of things that get launched on Base. All of the AI agent meta virtuals was on Base as well, wasn't it, Legendary? Virtuals was on Base.
Yes, you have
So
Moonwell Finance, which is a protocol, if I remember correctly, that Coach also likes to use, listener of the show. I use that myself as well when it comes to lending, to farm 3% yield on ETH, to farm 7% on USDC, farm 4% on URC, on Euro stablecoin. Which is what I'm using on Base. If you don't want that because that's too experimental, Aave is also on Base, unsurprisingly, as you said, as a massive DeFi platform. And when it comes to the swapping side of things and liquidity provision, you have Aerodrome. Virtuals is still interesting. I think that Oxy actually raised the point yesterday that Vader, which was one of the more prominent AI tokens, is, and I haven't read into this, I need to read into this, is doing a pivot apparently into robotics. So, which I don't know if they're changing a trend, if there's something substantial behind that, not specifically to Vader, but the point more is to say that the virtual segment and coins that basically stem from this era are still active. There's a couple of robotics play that I have running on virtuals at the moment, which is just too small tickers to mention them publicly, basically. But there's a ton of things you can do on Base, and also credits where credits are due. ICO Beast did call that on the timeline. He did say very prominently that there's going to be a Base airdrop, and that was earlier this year, I think in January or so. And also made the point that Arbitrum followed the same playbook, which was denying there's ever going to be a token until they had a token. So The question will be how much historical activity will factor in, because I feel like
Yeah.
we have a
We'll
ton
have
of
to.
that. A lot of our listeners have that because they participated in the virtual ecosystem or in other areas on Base, and
Yeah.
how important it will be to have that continuous activity. So I think that
so.
will probably be relevant. So as you said, and as we said at the start of the show, it will be the case that we probably will have to reallocate some capital and some more, at least yield farming, passive farming. I don't have time to do more active stuff at the moment on Base, but just have more capital exposure towards that too.
Yeah, I think that would be my approach. It's like, if you have been active already on Base, this is your time to, like, look, if you've got some spare stuff, just stick it on Base and put it to work. That
And
would
it's
be
easy,
my
right? If
approach.
you have something on Aave on mainnet, just bridge that
Exactly.
to Base and farm it on Base instead of mainnet.
Exactly. That's what I would do. If you have never done anything on Base, for some reason that you're in that bracket, I don't know if it's going to be worth your time. So many people have done so much. There's going to be so many wallets that have done a lot more. You never know the potential probability of you getting like a higher thing. My instinct after doing this for some time is that if you've not done anything, it'll be hard for you to make a meaningful move now. It's more just a reminder for people who've already done stuff, have built up a meaningful track history. Probably just allocate something, keep the wallet fresh, and keep it active, even if it's something just by like lending. So that would be our thoughts. But I think what we should do, Ledge, is we will come up with a list of things that we like on Base, and then we'll put it in our Telegram community for people to just check over. It's like, look, if you don't want to really have to think about it, let's have a few options, maybe 3, 4, 5 potential options of different things that people can do, and maybe just park some capital somewhere, earn some yield, do something lazy on Base to just keep yourself active. So I think that'll be the next thing that we can do. But guys, that was a good show. Went a little bit over time. Appreciate you for joining us as always. Thanks to Legendary for co-hosting with me as always. Thanks to Funky for his commentary as usual, and Oxy and Carpenter for their contributions today. Thank you so much for joining us. We do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X. We're live on YouTube. You catch us on Apple and Spotify too. We'll be back same time, same place tomorrow. Have a wonderful day. Take care. We'll see you then. Bye-bye.